Hello, Accounting 2. This is Mr. Johnson, and we are going to talk about Chapter 19, Section 2, the income statement. What we're going to learn in Chapter 19, Section 2 is what is included in each of the 5 sections of the income statement. We're going to talk about how to prepare an income statement using 4 amount columns. We're going to talk about how to calculate the cost of merchandise sold and how to calculate the gross profit on sales. We'll wait till another section to talk about how to analyze the information on the income statement. All right, the income statement. The income statement for a merchandising business has 5 sections, and they include the revenue section, cost of merchandise sold, gross profit on sales, and operating expenses, and net income or loss. Let's take a look at these sections one by one. Let's start with revenue. All right, this section reports the net sales for the period. First off, we're going to start off with our heading with the who, what, and the when. And this is for the period that ends on a certain date. And we're going to start off with revenue. And we're going to align revenue to the left. And we're going to do colon. Okay. From there, we're going to go to the next line where we are going to indent our sales. Okay. This is the revenue that's coming into our business. And we're going to use the third column. Here's the first column. Here is the second column, and here is the third column, okay? And obviously the fourth column out here. All right, so we are going to put in sales, and we're going to use the third column to enter the amount of sales that we have for the period. After we have sales, we go to the next column. We are going to indent under sales, and we are going to put less colon, all right, which means that we're going to have some things underneath it. So we're going to start out with sales discounts. Sales discounts, we're going to use the second column, put that entry in there. Underneath that, we're going to include, right underneath that, sales returns and allowances. Again, we're going to reduce our sales by these 2 amounts. We come up with a total after we single rule. We include our value right next to our sales returns and allowances in that third column. And with our single rule, we know that this says less. So we are going to take our sales, in this case $320,450, less the $2,730 to give us our net sales, which we are going to identify on this row. Indented net sales is going to be $317,720. This is carried all the way out to column 4. And for clarification purposes, the sales discounts and sales returns and allowances from earlier chapters as a review are both contra revenue accounts. All right, we're going to talk about the next 2 sections that appear on the income statement. The first being the cost of merchandise sold section. The cost of merchandise sold is the actual cost to the business of the merchandise that was sold to customers during the period. We're going to start with our beginning merchandise inventory, the beginning of the fiscal or calendar year. We're going to add to that the net purchases that took place during that period. That will give us the cost of merchandise that is available for sale. From there, we enter in our ending merchandise inventory. We're going to take that away, and that leaves us with our cost of merchandise sold. So that is our cost of merchandise sold section. The next section we're going to talk about, and we'll show both on the next page in the 4-column document, is net purchases. Net purchases is all of the costs that are related to merchandise purchased during the period. So we're going to start out with purchases, and we're going to add into that any transportation costs. So we call that transportation in. That is an account. Okay, so we total those 2 up, and that gives us our cost of delivered merchandise. From there, we are going to take away our purchases discounts and our purchase returns and allowances. After we take those away, that leaves us with our net purchases. So let's take a look at this area on our 4-column worksheet here. So we're going to start off at the top, align to the left with a colon, cost of merchandise sold. Underneath that, indented, we're going to enter in our beginning inventory. This happens to be on January 1st. So merchandise inventory as of January 1st is going to go into, again, the 3rd column. Okay. From there, we're going to add in our purchases, and we add them in. We start with our first column. We enter the value in there. And we're also going to add in our transportation. So plus transportation in goes in the first column. We single rule that. Underneath that is our cost of delivered merchandise. Okay, our purchases plus our transportation in gives us our cost of delivered merchandise, and that will go into column 2. All right. From there, we need to then take away our purchase discounts and our purchases, returns, and allowances. They both go in to column 1. From there, we will single rule, and we will enter in the total of these two accounts. In this case, it is 3,140, and we are going to take that number, 3,140, away from our cost of delivered merchandise, which is $2,110, $736.18. When we take that number away from the cost of delivered merchandise, it gives us our net purchases. So our net purchases will go in our third column, and in this case is $207,596.18. From there, we single rule that amount. We've got our two numbers, one above the other, okay? And we're going to take our merchandise inventory from January 1st, and we are going to add it to our net purchases to give us the cost of merchandise that is available for sale to our customers. That is $292,517.18. Okay? From there, we're going to put in our merchandise inventory at the end of the fiscal period or calendar year. And here's our merchandise inventory as of December 31st. And it's $81,385. From there, we are going to single rule. Okay, that is telling us to subtract from our cost of merchandise available. The remaining number goes into our fourth column. Okay, and that remaining number is further indented, is our cost of merchandise that we sold. So cost of merchandise sold, in this case, is $211,132.18 with a single rule coming across. The next section we have to talk about is the gross profit on sales section. The gross profit on sales is the profit that is made during the period before operating expenses are deducted. Gross profit on sales is found by subtracting the cost of merchandise sold from net sales, and we'll cover this in about 3 slides. We'll show you the whole worksheet. Okay. Next will be the operating expenses section. You're going to list your operating expenses. That's the cost of the goods and services that are used in the process of you earning revenue for the business. And then we will get to the final section of the income statement, which reports the net income or the net loss for the period. The operating income is the amount of income earned before federal taxes are deducted. Okay. To calculate operating income, subtract the total operating expenses from the gross profit on sales. All right, on the last breakout session of the worksheet, we left off right here with the cost of merchandise sold. I apologize. Next, we have to come up with our gross profit on sales. And the way we determine that is we take our net sales up top, and we take our cost of merchandise sold. We deduct one from the other, and we wind up with a gross profit on sales of $106,587.82. After we get our gross profit on sales, our next step is we're going to list our operating expenses. So we're going to list operating expenses aligned to the left with a colon, and we're going to indent and list all of our expenses for our business. And we're going to enter those expenses into our third column. Okay, so we list those, we get down to the bottom, we single rule, and we identify that total as the total operating expenses with an indentation. Okay, and that's going to be entered into the fourth column of the worksheet. Okay, our total operating expenses entered into the fourth column of the worksheet. We're going to single rule that. Single rule tells us we're going to take away our operating expenses from our gross profit on sales, and that's going to leave us with our operating income. Our operating income for this example is $42,669.72. Okay, After our operating income is entered in that fourth column, we then take away the federal corporate income tax expense. In this case, it is $9,995. We single rule that, and that gives us a net income of $32,674.72. We complete the task, and we double rule. We are done at this point. Just as a note, the federal corporate income tax, it is customary to present the federal corporate income tax separate on the income statement. This is done so that the income statement shows the amount of operating income. Okay? Operating income is the amount of income earned before federal corporate income taxes are deducted. All right, I know this was a little bit of a longer video, but this concludes the income statement section of our Chapter 19, Section 2. So you're going to go ahead and you're going to take out your demonstration problems, and you are going to complete demonstration problems 19-1, 19-2, 19-3, and 19-4. Good luck, and we will have the answers for you when you are in class.